The Spin-Off Podcast Network.
Talofa lover, I'm Madeline Chapman, editor at The Spin-Off. If you have the means, consider supporting our high-quality journalism by becoming a Spin-Off member. Sign up now at thespinoff.co.nz/donate.
You're listening to Business is Boring, a podcast that reckons it's anything but. Business is Boring is brought to you by SparkLab, offering inspiration and practical advice to help businesses find their edge. To hear more about SparkLab, including details about the latest events, workshops, and business tools, visit sparklab.co.nz. And now, here's your host, Simon Pound.
You're listening to Business is Boring, a podcast that reckons it's anything but. Business is Boring is made by The Spin-Off with help from Callaghan Innovation, New Zealand's innovation agency. Here's your host, Simon Pound.
Until very recently, if you were wanting to buy shares in American companies like Apple, Facebook, Google or Tesla, it is quite amazing how hard it could be. You needed either to be buying an awful lot so as to make sense of the massive fees of using a local bank share trading service as a broker, or you needed to navigate a confusing and bewildering process to get access to an international broking platform and then all the tax and hassle around that. It is not recommended. And now, an innovative new platform has started up to solve just this problem, offering people in New Zealand access to US shares and exchange-traded funds with brokerage fees at an order of magnitude under the existing big bank status quo, which may make it surprising that this startup has come from the same holding company as a big bank. It's called Hatch and is from Kiwi Wealth, the sister company to Kiwi Bank, and is a product of their focus on innovation. Because the big banking sector is ripe for disruption, and big change is coming with open banking already changing the fee and service landscape around the world. It's very cool to see that coming from inside a bank here. The general manager of Hatch, Kristen Lunman, and the head of experience, Natalie Ferguson, have made it their business to do just that. Working first with the Kiwi Bank FinTech Accelerator and then in the Kiwi Wealth Innovation Lab, resulting in this game changer. A disclaimer here is that I am a user, but only out of having wanted and then found the service and then asking them on once finding out how interesting it was. To talk the service, opening up investment opportunities and innovating in a bank environment, Natalie Ferguson and Kristen Lunman join us now. G'day, kia ora, thank you for coming along.
Hey Simon, thanks.
Thanks for having us.
Hey, so first we're going to say, Kristen, can you say hello so we know your voice?
Hello, hello.
And Natalie in the too.
I'm the New Zealander, she's the Canadian.
Hey, wonderful. So first up, having you both on here, tell me about how it is that you came to be getting into the innovation space in this environment.
So starting with, as you'd mentioned, the Kiwi Bank FinTech Accelerator really sparked my love for FinTech. I think New Zealand has been, slow in adopting financial change, largely because we came out of the GFC, global financial crisis, unscathed. And so we still have a fairly high level of trust in our financial services, service providers. And so we've been slow to, adopting the game-changing innovations we see overseas, such as, anything from Wealth Simple to, any of the robo-advisors to Robinhood. And so there's all these exciting fintechs that are democratizing financial lives of people and access to amazing instruments, making it cheaper, more accessible, but also giving people a new relationship with their money. And so I think that experience with these fantastic startups opened my eyes to, a world of opportunities that we simply didn't have access to in New Zealand. We've got the technology to do it. We've got the smart people to do it here in New Zealand. So I guess the timing was right. Regulators were really supportive. We had businesses on board. Banks were actually excited about innovating. So that started off my love of fintech. I was then approached by the CEO of Kiwi Wealth, who had real foresight to say, look, disruption's coming. If we're not looking at doing it ourselves, we know the Amazons and the big tech companies are going to come and do it and actually take over these wonderful Kiwi-owned businesses. And so the challenge was put to me is what might the future of wealth in particular look like in New Zealand, and how can you help us along this journey? And it really gave us a blank slate to go and be bold, which has been a real key word of ours. And so I assembled a fantastic team, including Natalie, and the sky was the limit. We set out to do something different. We scanned the market and just said we don't want to have a Me Too product. And so we talked to hundreds of people. We learned all sorts of problems, which gosh, they're endless. So many problems to solve. So come on, fintechs, we can do this. And we just found, some really interesting ones and found a really interesting way to solve it. And thus Hatch became Hatch.
Yeah, I mean, and just to take a step back into the wider environment as well, like with the Kiwi Bank's FinTech Accelerator program, that idea of a bank investing in a bunch of small startups and helping to, provide the conditions for them to come out with some really interesting ideas is such a brave and cool idea. And in the wider kind of context, things like open banking, they are kind of in other markets allowing a lot of the stuff to happen whether banks like it or not. And in New Zealand, that's not here yet.
Yeah.
Can you tell us a little bit about what open banking is and how that kind of provides a backdrop for a lot of this?
Sure thing. So if you think of open banking as accessibility to data, people's data, so the way we're looking, watching the UK and Australia attack it is, number one, opening up access to payments infrastructure, and number two, customer account information. Sounds super boring, but look, you're a customer. You've got different buckets for things. You may work with 3 different banks. You may be a small business at a different bank, and there's really no oversight over your financial situation. You've got probably a Kiwi saver that's really hidden. You have no idea what your balance is there, and nothing's talking to each other. And also with respect to payments, with peer-to-peer payments and all these interesting things we're watching overseas. What open banking does is allow the pipes to connect from business to business so that everything talks to each other and the customer is at the center, so that they can start to leverage kind of all this data that's being shared to create like a real transparent view of a perfect person's financial life. And not only that, but deliver it much more cost effectively. So, say goodbye to fees and unfair advantages of kind of big banks of times that have gone by. So of times have passed. And so that's really what we're watching overseas and very much welcoming it here to New Zealand.
And it's wild, isn't it? Some of the changes, like, you look at the big international players like Revolut that a lot of people listening might know if they've travelled much overseas, where you can have like an international checking card with none of the costs of Forex transfer and just basically act like it's your home bank wherever you are in the world. And these kind of things, which are, part of this wave, New Zealand's been a little bit protected from them so far, but they're coming, aren't they? Which is really cool that, you're working on some of these things that do remove that kind of order of magnitude extra cost that was involved.
Yeah, and I think the banks know it's coming. I mean, so the worst thing possible is to have regulators saying you have to do this. It's probably better in the bank's interest and for their brand to say, we're actually open to doing this because we want to put the customer at the center. We want to build these like amazing, comprehensive aggregate views of their financial lives so that we can help people budget and move money around and potentially even switch from our bank savings accounts to another one because they're going to get a better deal. And so I think it's probably in the best interest of the bank to start to, really lead that process, or effectively they're going to end up being, disintermediated and just become pipes. And so it'll be interesting to watch New Zealand, but I think it's probably best if it's industry-led and really in collaboration with some cool fintechs and solutions.
And Hatch is very much like that, isn't it? In that it's taking down by a factor of 10 the fees that were involved in buying international shares. How did you land on that as the particular issue out of, I imagine, there's probably quite a few pain points in banking that are there to be solved?
I suppose we started with Hatch as sort of targeting, I suppose, what we'd call the low-hanging fruit. So we, like Kristen said, did hundreds of hours of research. We talked to so many New Zealanders in all branches of life, from all walks of life, with all sorts of financial goals and knowledge and awareness and interest. And then from there, we kind of put together probably 5 concepts of quite different concepts. So everything from, we had the concept of a fantasy football game that was actually share trading. So you could build your fantasy football team, share clubs where you band your money together and invest as a group, all the way through to much more of a tell us a bit more about yourself and we'll start to give you some advice. People were pretty polite about those. They had a play around and they said, "Oh, that's a great idea. Well done, you guys." And then we sort of started to look into this concept of access to the world's biggest companies, the kind of companies we're surrounded by every day. So we created the first really rough picture-based prototype of that. As soon as we sat down, opened our phone and showed it to people, they grabbed the phones off us and were madly trying to tap Tesla and Apple and saying, "When can I have this? Can I be your first investor?" And so that was, I mean, for us, that when we talk about putting the customers at the centre of things, that's what made the decision for us. So initially we thought it was a very, very small niche market that was going to be interested, and they were highly motivated investors who were already investing quite actively on the share markets that were available to them. I suppose since launch, we've realised that our niche market is slightly less niche than we thought. And the group of motivated investors is actually a lot bigger and not necessarily broken down by age or money as much as we thought. So, so it was basically trying to get to address the biggest calling in the fastest way, really.
There are a couple of things there that, I found it just as a punter, Googling around, because over the years, been really interested in some kind of, international businesses that, everyone knows and that you use all the time. And you can kind of see, you think you can see where there might be more use for them in the future. But it's been so hard and so expensive. And as these big companies like your Googles or your Amazons or your Apples have such big per share costs, that's also daunting to buy a share. So the things that really were game changing about this, I thought, were the ability to do fractions.
Absolutely.
Tell us about landing on that idea and how you make that. How do you make that happen?
So we partner with global partners to provide. So part of Hatch is we're building a financial platform. We're not trying to build all these products ourselves, which gives us a huge competitive advantage. So we've partnered with world-class companies, one of whom is Drive Wealth in the US. They're our US brokerage partners. So when you open an account with Hatch, you're effectively also opening your own US brokerage account with Drive Wealth and accessing it through Hatch. So part of Drive Wealth's offering is fractional shares, which, like you say, is brilliant. It's so fun to be able to put some money in Amazon, which is, even if you lower brokerage fees and FX fees, they're still $2,000 a share. So you're still cut off pretty much. So for us, it was a no-brainer for your average New Zealander to be able to invest for $3 a trade in some of the world's biggest companies without having to put in more than a couple of $100 for it to make financial sense.
And that's the makes financial sense part of it, isn't it? Because there was access to these companies in the New Zealand kind of market if you were buying full shares and willing to pay what worked out to be kind of an 80 American plus brokerage fee, pretty much the best you could possibly ever do. And by the time you pay 80 American on the way in and the way out and the Forex transfer fee, you've got to be investing kind of $20,000, $30,000 at a time just to kind of make it make any sense at all. And I don't know how many people listening here have 20 or 30,000 at a time to be investing, but I imagine that's a pretty small market.
And I think one of the things that we've become big believers in is there's a lot of myths about money in New Zealand, and I think we really smashed through some of them since launching Hatch. One of them is that you have to have a lot of money to be a savvy investor. I think we traditionally have kind of felt like that market that has $20,000 to $30,000 to spend is the only group who will be wanting to invest in the US share market. What we found actually is that people who may only have $100 or $200 a week or a month are equally as savvy, equally as motivated to learn, and equally as motivated to dive in and do better things with their money. No one was giving them access. That was the only barrier, is they were cut off. So like I say, we thought we had a niche market. Our niche market is actually a lot bigger than we thought.
And we're stunned at how long it took. I mean, we're talking we've got the tech. It's been around. APIs have been a thing for some time now. So I just think it's complacency of existing players in the space, and that we can operate with a very tiny team thanks to technology and allow for affordable access. We don't have to have humans manning phones. We've got naturally leveraging technology for your customer support and so on and so forth. So, I think it's just using the tech in the right way, creating a delightful experience, and just, providing easy and affordable access is the mission.
And we have this idea in New Zealand that New Zealanders love property. We love property. But when we started to look around, even investigating the first iteration of Hatch, what are our other options for the everyday New Zealander? You can invest in the New Zealand share market, the Australian share market, or property, really. So maybe this love affair with property and this property crisis is actually maybe a result of lack of access rather than lack of motivation to do anything else.
Yeah, and it's often said that, one of the reasons many local players are moving to the Australian listing boards rather than the NZX is because there isn't the confidence of the local market in backing them. But part of that has to be the lack of options there are, and we don't see the Australian business coverage of the ASX, and it's very hard to kind of have much of an awareness of the companies that are good there compared to, I imagine, and it's been really interesting when you guys have been talking about the biggest companies that people have been investing in. Everyone's heard of Tesla or Amazon or Apple or the like.
And they're so fun to talk about. The great thing about the US share market as well is it's a lot more volatile. Great or bad thing, depending on your attitude. If you put some money in Tesla, you're in for a great ride. And what we found with our investors so far, they'll put some money in the likes of Tesla and Amazon, and the next thing you know, that they're reading every article about Tesla and Amazon. They're having wild debates with their friends about it. They're thinking about the future of electricity and cars and shopping, and suddenly we're all by default educating ourselves. We're understanding how the media impacts share prices. We're understanding how Twitter impacts share prices. By a couple of $100 investment, you're getting this education that the New Zealand share market just hasn't, through the sheer lack of scale, got the ability to deliver in the same amount of time.
And how has that been, launching this product? Probably at like the peak,
top,
probably at the absolute peak of the Nasdaq's run, and then going into a period where 20% has been wiped out. That must be probably not the ideal launch period.
It's great to lose people's money.
Yeah, no, it wasn't. We didn't anticipate. We were delayed a wee bit because due diligence is so important. This is the very first time when you talk about open banking, you're talking about platforms that are plugging in partners based on APIs, and you have to give up a certain level of control because you're not creating everything yourself as a brand. So think of a bank brand now bringing someone else in-house that is dealing with their customers' money. I mean, that's a very scary thing, and that is the future of banking. In fact, is that's all this whole unbundling and then rebundling of the bank. And the rebundling is, in fact, going to be partnerships and marketplaces. And so I think there was this real hurdle to get over, and this this extensive due diligence on this partner that now we're very good about. We know all sorts of U.S. law and regulation, and which is helpful. And I think, we had to jump over the last hurdle. But as a result, we were delayed in launch and naturally decided to launch at the height of the bull market, which is awesome. And not only that, but at the time, the dollar... the Kiwi dollar wasn't, had taken a bit of a dive against the US dollar. So with Hatch, you're of course having to take into account the foreign exchange. We change your money into USD. And then naturally this new normal of the US markets, share markets, which are volatile. And then of course there's anticipation of recession and what might that be like. And so we were, hedging emotionally that this might not have the uptake that, we had hoped for, and pleasantly surprised. There's just people that want to get in, see volatility as opportunity, recognize for the most part this is a long-term play, and really do believe in the fundamentals of these world-class companies that are actually changing the world. They change how we behave. I mean, I read an article the other day. I think Netflix has 50% penetration in New Zealand. And so, we've absolutely changed our TV viewing habits. And this is a company that you can own a slice of, through Hatch. And so it's the fundamentals are strong in that company. And so irregardless of the volatility that is to come, the recession that will come eventually, we've ridden through some tough ones before, and investors have pleasantly surprised us in their maturity to hold and ride it out. And what's great about, not only do we give a platform of access, but we've given them a platform to chat in our investors club, and they can come in and actually talk about it and be honest about their, how's everyone feeling today? Waking up, or Donald Trump tweets something and something else happens. And marijuana was a really interesting ride that, Hatch Investors Club was going off about the options of this legalizing cannabis and opportunities to get in through Hatch, which there are many. And it's also given people a platform to talk about their fears, to talk about, get advice from one another and to learn from one another, which is pretty cool.
And quite honest discussion too. For every booster of marijuana stocks, there'll be people saying, well, someone's going to be a winner in this category, but before anyone's been able to legally sell much, it's probably not a great idea to have extraordinary forward multiples on non-existent revenue.
Exactly.
Well, some people disagree with that, including our content person.
Yeah, she's banking on it. But then there's even exchange traded funds now that are that represent the category as a whole. So if you bank, you don't have to bank on one and automatic diversification there. So Hatch has got one thing we haven't really pushed is the amount of exchange traded funds that are listed on Hatch, and it's probably just a result of our early indications where people are really excited about the brands that they know and love, surround themselves with on a daily basis. But there is a lot of opportunity for us to be pushing. We've learned, some of the things we've learned is, particularly for women and some of these younger generation coming in, is very much align values to investing. So exchange traded funds are a fantastic way to just quickly align yourself to a value. So anything from clean and green to gender diversity to women-led companies, these are actually, you have fund managers that are developing exchange traded funds based on those, based on those styles. And you can invest in that, automatically diversify and align your values with investing. So that I think there's a real opportunity for us to be pushing and moving in that direction.
And same with the emerging industries as well. You might not want to back one particular cannabis company, but you might think that medicinal marijuana is the future. Put some money in an ETF and diversifying your risk.
Yeah, take us one step back for people who may not know about what an exchange traded fund is. How does it work that they gather together the fates and futures of many into one thing that you can buy a piece of?
So exchange traded funds is we explain it basically as a basket of shares that you can buy a share in. So for example, if we talk about a cannabis ETF, it might be a range of different cannabis companies that they group together into a fund. And then rather than buying a share in one individual cannabis company, you buy a share in multiple, which is spread out across multiple cannabis companies. So you basically buy instant diversification. So once lowering your risk because you're spreading your risk across multiple companies. So in the case of cannabis, there's these early movers. Some will fail. Some won't do super well. But if you're buying an ETF, that sort of risk of some of them taking off and some of them failing kind of balances out.
And they rebalance them as well. So probably the most common one is an index, which basically is just tracks exactly the index. And that basket of funds would represent exactly like what, for example, the S&P 500. That's something you can get here in New Zealand, the US S&P 500. And so it would be an exact representation of that index and basically just does exactly what that index does. So whatever, however big a certain share is in that particular interest is just at a micro level and in that ETF. And so, but what's really cool on Hatch is not only are there exchange traded funds that track indexes, but like emerging markets and things like beating. There's ESG, so there's responsible exchange traded funds. So what they do is they would rate companies based on all these factors if they're into helping, into sustainable practices for that aid the environment, if they're into, good governance practices. So effectively well-run companies, they would group a bunch of these companies together and you could just buy, the small slice of the mix of them, if that makes sense.
And as this is something talking about financial products, it's very important to mention at this point that none of this constitutes financial advice in any way, shape or form. But it is possible to say that there have been lots of studies about index funds having reliably so far outperformed most people doing investment decisions on their own. And those are index funds where they just track the shape of, say, the top 500 companies in an index. But in terms of exchange traded funds, that's far more volatile as a result of it's got to do with also the investment choices of the fund managers putting it together. So those aren't considered to be quite such a safe asset, are they?
Well, no, it can be, some of them, exchange traded funds can be totally passive in that they just track a group. They can be also actively managed. So an interesting point. We are probably one of the more controversial things of Hatch is that we have come in as self-directed platform that offer a number of passive instruments in an actively managed wealth company. So this, there was some real talking about trying to innovate in a bank and a wealth company. That these are some challenges that we certainly had to overcome.
And when the rest of the business probably operates on some form of fee model, and one of your main things is that you're, by making it self-directed, removing fees enormously.
Well, and I think, look, where I always came from was this isn't, we are truly democratizing, like the masses can't access private banking and private portfolios. And there's the majority of Kiwis don't have the money to access unbiased, really smart advice. And so we're serving in large part a group of people that either, can only access advice that is biased, based on selling a product, and or friends and family and social groupings. And so and then, as you'd mentioned, the access to actually act on any of this advice that they might get is really hard to do on their own. And so I think that was kind of an easy story to tell, is that it's, we're not cannibalizing anything. We're simply just democratizing what you're doing for the masses.
And providing an inflow of new people who are educated, interested and aware, I imagine.
And even when you talk about actively managed funds, which Kiwi Wealth does do, no one person's all actively managed or all self-directed. Providing access to people being able to make their own investment decisions. Maybe they have 80% managed by an investment manager and 20% they dabble in on their own. That's fine. And I think sort of getting beyond that attitude of it's one or the other, that actually there's no conflict there. You can do both, was quite a big sort of barrier to overcome.
Yeah. And in terms of that wider mission, you've mentioned before that I've seen that this is the start. So where does it go from opening up? What is it? There's 2,700 something individual shares and 400 and something funds that people have access to. Where does it go next?
Well, I think there's two pieces. The one is the US piece. So how do we actually, because when you launch a startup, as many do, it's you start with the minimum viable, product. And it's like, what is the minimum thing that we can build and get it in and actually start to build it with our investors? And that was our promise to do that. So I think the first piece is to start to get some of those things right. We've got, laundry list of feature requests. And so we're knocking those off, rolling out trusts, starting this week and into the new year. Limit orders were launched the other day. And I think it's that carry on of what interesting things can we do with this values based investing and ETFs and filters and potentially even, some interesting way to construct portfolios without offering advice. And so that, I think there's the US piece. And then there's this amazing opportunity of what's next. And the mission of easy and affordable access to world-class investment opportunities. Oh my goodness, there's so much we could do. What are we going to do, Nat? What are we going to do?
So I think what we've really tried to do internally, especially within a corporate, is people want a roadmap. They want us to say we're going to release product B, C, D. These are exactly what they're going to be. We've kind of flipped that on its head a little bit and said we have a really strong vision and mission, world-class investments, working really closely with our customers. So we don't know what those next products are necessarily going to be, well, although I think we're starting to form some ideas of what they might be. But sticking with our mission and our philosophy is very much, we've identified probably three or four different potential next products. And so now we're madly in going back and talking to our investors, looking at the data of what we've learnt so far, understanding much more about what people might want, why they want it, and that will inform what comes next and next after that.
How has your backgrounds in, both of you have backgrounds in startups. You, Kristen, working in Whipster, which for people who may not be familiar with it, is like a world-class startup that helps people kind of comment and collaborate on video edits. And you were instrumental in a lot of its growth over some really kind of like key times. And with the work that you've done in startups too, like my tours there, Natalie, like what have you managed to bring from that startup life and bring into a corporate structure?
Well, we certainly don't operate like a corporate. And what's so cool is that I'll get to my kind of bring what experience I brought in, because we've both brought a huge amount in. But what we've noticed is that we've started to influence the wider corporate in ways that we act. And I think because we've been able to exhibit how a traditional startup would act and all of the fantastic, cultural elements that come along with that, and camaraderie and passion and mission, that we've actually had, real level of influence over the wider business and probably actually with the wider banking group. I think people are excited to see a group of people that have a purpose, that wake up every day excited about what they're doing, that have a real strong sense of community, really enjoy hanging out with each other, have a very strong dedication to being, exceptional and bold and all of these values that you don't traditionally talk about in a traditional financial services company, but they're thinking, wow, like we want some of what they've got. And so we've actually seen some really cool transformation in the wider business. But with respect to the stuff I brought, I've named some of it. I think the coolest thing about the startup space is that ability to be really bold and do something really hard, very hard, in a very noisy world where you're just trying to be heard, you're just trying to make a difference. I think just joining together as a small group of people that care so much about carving that path and making that difference is probably something that I'll seek for the rest of my life. Hopefully hatch for a long, long time. But I think I couldn't imagine living any other way, not coming into work with a group of people that are really intent on doing something and being bold about it. And if it means being controversial or making people uncomfortable, that's what we love to do. And so I think I learned that in the startup space about what really team means. And also no egos, like absolute. When you graduate from university, it's so funny because it's like, I'm going to run the world. And you come out and you're like, oh my God, I'm doing data entry. And then you work your way up to like a certain job and you're like, I'm so important because, what's the next step? Office. And then you get into a startup and it's like, nah, there's none of that. It's like you're rubbing shoulders with your mates and you're, oh my gosh, washing your own dishes and like, woe is me. No, but like, it's really, it's like this thing where you're like, I'm actually like answering customer support tickets at 11 o'clock at night. Like, my God, what's happened? And so I think that's like, there's just no ego. And you're just like, get your hands dirty, get in, get the stuff done, because that's what we're here to do. And that's kind of what I brought, I think, to Hatch personally. And we're doing the best we can do.
I suppose I did it slightly different out of uni. I started my first startup basically in uni, and I've never had a job. And I'm almost 35. So my whole experience is either working as a UX designer before that was even a thing, product person, and starting a whole range of startups. And I think I have a particular skill in starting the exact right thing at the exact wrong time. So I've done
except for Hatch.
Yeah. Well, and maybe not even exactly the right thing, but we've had varying degrees of success with varying things. So, but what I think I've spent the last 5 years, it gets a bit tiring after a while. So I think I've spent the last 5 or so years going into a widest range of companies as possible and really understanding how different companies work, what works well, what doesn't work well. Understanding from my own experience about self-funding startups, getting funded through startups, all of them very small time, and had a really strong idea of what I think would really work. And so when I first spoke to Kristen, and I was, in all honesty, quite skeptical hearing about this idea of a corporate startup. I think we've all heard of that before, and sandpits and beanbags and whiteboards. was when we actually got stuck in and started doing it. Not only is it a personal interest of mine, I've invested in stuff for years. I think more, especially as a crazy feminist, which I've just heard recently, you don't have to add the crazy because that's the assumption when you announce yourself as a feminist. I truly believe, especially more women should be investing. So coming into Hatch was for me, the opportunity to try and test out all the stuff that I've learnt over the last 14 odd years doing stuff. So for me, it was very much like Kristen said, following up on that, is really sticking strongly to our beliefs about how things should be done, taking an honest customer-centric approach, doing the research, being bold. And by that, we mean not just playing lip service to it. If our customers say, we won't do this, or if they seem like they won't, or if the evidence shows they're not, don't just follow your gut. Follow what you're seeing. And I think that having fun has been, it sounds kind of flippant, but especially in a corporate environment, you have to sort of appear serious to be taken seriously. And I think what we've achieved so far has flipped a lot of people's opinions on how you can actually get stuff done. You can get it done fast and you can get it done very well. So for me, it was just proving out a model of the things that do and don't work and trying it with an awesome environment with an awesome team that I think we all kind of believe in the same idea. So,
and did people tell you it couldn't be done doing this inside a corporate environment? Did people tell you were bananas?
Yeah, it was interesting. I think everyone was waiting for us to fail. Like,
I don't think they needed to tell us.
I think pretty much it was like, yeah, we'll just throw a little bit of money. No, certainly not the key stakeholders, but it's not hard to say, who are these people and what are they doing and what's the point? Why are we throwing money over there when we can be doing something else? And I think it was really just, this will be wrapped up in no time. So it was more of that, yeah. That's putting it nicely, I think, Simon. I think there's not many cases of a successful startup that's come out of a corporate or corporate innovation lab. And there's so many reasons for that. There have been absolutely a few. And I just think you get the ingredients right. You get the stakeholders that are behind it. You've got to get the funding. And so we pitch to our shareholders very much like a startup would pitch to their investors. It's no different. We just happen to be getting our money from, a different type of investor. And then, I think you just get the right team and you execute well. And you stand your ground. And so I think, I don't think any of us were surprised that we did it. I don't think there was any doubt that we were going to do it. So it was just not listening to the noise.
I think we went in knowing the risks. And to me, the biggest risk is very much along the line of diluting down your dream because there's so much pressure to do it. Everyone at a high level says, we want to innovate, we want to disrupt. But when it comes to partnering with a US brokerage company, the due diligence involved, suddenly it's a bit like, how much can we do this? How long can we take? And sticking with our philosophy of being bold and saying, we will do this, and not watering it down and not being a slightly lesser version and not compromising, which to me, that was probably the hardest part and it still continues to be because there's always pressure to just try and do it a little bit less because it feels a bit safer. So I would say that's almost our biggest accomplishment as well. And where I think corporate startups, when they succeed, how they succeed, because they get the ultimate benefit of being well-funded with both financial, but also having the support of we've got a great legal team, we get advisors from multiple parts of the company, but also not sort of giving into that corporate, the accidental corporate pressure to do things the way it's always been done. Just by being part of the corporate.
And what advice would you give people who are trying to make something cool like this happen inside environments that, and it's not like banks or kind of, financial organizations are rule bound and slow moving for fun. I mean, they do a lot of that stuff for very, very good reasons as well. So, what are some recipes, some of the things that help to make those successful in those environments?
I think there's a few things you can do. You can always do it on the side and do it on your own, particularly if you've got a real skill set in a certain area and you see a problem, because not all corporates are going to have the risk appetite to do it themselves. So you could certainly make a pitch. I'm a strong believer in having a tech leader or an innovation leader on an executive team. If you don't have that, it's pretty tricky to push these things through. But banks nowadays are starting to get with it. I mean, almost everyone has got a venture arm or an innovation lab, or they're supporting some sort of level of innovation. So there's ways to, I think certainly get involved. And if you're not getting any breakthroughs, absolutely do it on your own. There's, enormous, if anything I've learned is there's so many problems to be solved in New Zealand. And granted, New Zealand's small, but it's a perfect place to start and to get to really get a business off the ground before going global if need be. And so I think I would just suggest do it. In terms of advice, Nat and I are always available to chat, tell some more stories. I think the community and learning off the community and collaborating with the community is huge. I think it's, I know, New Zealand is pretty small and super welcoming and supportive. And so I think talking to people and then validating the idea, is there really a problem, or is it just one that you personally have? Is it a problem that friends and family don't have? And so we spent a lot of time at cafes. And I think if you're not willing to go pitch your idea to a stranger, then you probably shouldn't try and get something off the ground. And so we spent tons of time accosting people in cafes and just saying, does this resonate with you? And people are willing to give the time. Like, if it's money, and yet everyone's stressed about money, everyone feels out of control, like, it's okay. And I just think people are willing to talk about that. So spend some time with strangers, to iterate on the idea, validate it. And then, of course, the ultimate test is someone willing to sign up to a beta list. Are they willing to pay for the solution? But you can do all that in like 3 weeks. It's not that hard. You just take the first step.
And as a final thought here, one question we always like to ask people that come on is, how do you define success?
I said I'd answer this one. I suppose, like I say, different kind of background from most people. I think for me, success, and actually even having all these interviews with all these investors recently, and it kind of boils down to the same thing. We talk to a lot of people who talk a lot about retiring at 40, at 43. And when you actually dig into what retiring means, it means I want to be able to choose what I work on. I want to be able to say, I don't want to do this. I want to be able to go on holidays with my kids for a year. So to me, what I think I probably learned at about 23-ish is success is living your best life now, working on the stuff you love and doing it really well, and financially building yourself into a position that you can continue to do that, which I say is slightly different, I suppose, from most people's version of success, because I think when you talk to a lot of people doing startup stuff, success is having $1 billion business or which in some cases is wonderful. What's also wonderful is having a sustainable, good, solid business that returns money to people, but also doing something really, really cool that you really, really believe in. And like we talk about, we do Jog Squad. We have this great team environment. We go away on holidays, living that life too.
Yeah, that's so cool. I love that definition of success. Hey, thank you so much for coming to join us today to talk. The service is called Hatch. You're able to find that on your internet machine. We've been talking today to Kristen Lunman, the General Manager, and Natalie Ferguson, the Head of Experience. Thanks for joining us.
Thank you. Thanks, Simon.
And thank you so much to Tina Tiller for producing. Tina, who every one of these records happens around the edge of a workday. This one's happening at 7:54 p.m. Most of them happen around 7:54 a.m. Thanks, mate, for making them happen. And thank you very much for listening.
You've been listening to Business is Boring, presented by Simon Pound. And brought to you by The Spinoff and Callaghan Innovation.
From the Spinoff Podcast Network, that was Business is Boring, brought to you by SparkLab. Make sure you're following Business is Boring wherever you get your podcasts. And for more information on SparkLab, visit sparklab.co.nz. Ready to rediscover the joys of cycling? With over 300 kilometres of cycle paths across Tamaki Makaurau, jumping on your bike and going for a ride is such a fun way to discover the city from a different perspective. Cycling is getting more and more popular across Auckland, so now's a great time to join the hype and give cycling a go. Head to at.govt/cycling to find your nearest cycleway today. The Spin-off Podcast Network.